The following program is brought to you by the Midas Gold Group.
This is the Gold Standard from Midas Gold Group with Kenneth Russo. Hello, I'm Dave Deno. Welcome to the Gold Standard, your source for secure investment opinion and information on the advantages of purchasing and owning precious metals. Whether you're a novice investor or an experienced collector, this is the program that gives you a realistic weekly perspective on the state of the economy, reliable information about using precious metals such as gold, silver, and platinum to safeguard your wealth, and remarkable details about specific precious metal coins and bullion. Ken Russo is a senior vice president at Midas Gold Group. His peers characterize him as a straight shooter who will work harder for you than anyone else. Ken, welcome. It's always good to spend time with you.
Yes, it's a pleasure to talk to you today, Dave.
Ken, I've been seeing an increasing number of articles about stock market warning signs, and the first one that I really want to take a look at today is titled A Stock Market Indicator That Predicted the 1987 Crash is Flashing Red. It says in part, amid a historic stock market rally, millions of Americans have been buying and trading stocks, but at least one key market indicator suggests that the party may not last. A widely followed gauge of what Wall Street calls investor complacency has been flashing a warning sign since early November. What can you tell us about this?
Well, I mean, you and I have been talking about, Dave, for a while that the markets are overvalued. Every indicator that we would ever see, it's historically overvalued. And we're also very alarmed at how we got here, with all this debt and all of this speculation. But it is what it is. Complacency means that people are not really worried about their investment in the stock market. They are kind of confident, for sure, that the government or the Fed is going to come to the rescue, print more money, raise the debt ceiling, so on, more debt. This is just one of the several warning signs, Dave, that we should be paying attention to. The market, to have a 10% correction, which is quite normal, they haven't really happened too much over the last few years. As we talked, it's been the best 12 years in the history of the stock market. So right now, greed is outpacing fear in this market, and complacency often signals, painful periods that are yet to come. But, there's a lot of bullishness out there, and a lot of kids at home that are new to investing, trading on apps, new investors, new generation. So, same game, different players.
There are plenty of signs, I read, that investors are extremely bullish. What are those signs?
Well, I mean, they're buying and they're holding. They are buying any pullback. And we've seen that over the past decade. If you're a buy and hold person in the last 10 years, there's no way in the world you lost money. If you did in the stock market, you should probably immediately fire your financial advisor or your stockbroker.
Yeah.
And, now today, we have a lot of kids trading on Robinhood. We talked last week about the margin situation where a lot of people are trading with borrowed money. It's a lot of speculation. And speculation, Dave, is great while it works. But eventually, this is all based on debt, free money, money created out of thin air. Someday it's going to end. And the stock market is going to get real nasty. The S&P 500 right now is trading at a price-earnings ratio of about 40 times earnings.
Wow.
So that's 40 times average earnings, over the past decade. That's a record high, and people can say whatever they want going forward. But, we remember the 2000 dot-com crash. We remember the 2008 subprime crisis. And this, what are we going to call this? The money liquidity crisis? Are we going to call it the inflation crash? What are we going to call it? The debt crash? We'll see what happens, and we'll see who can hold on to their wealth and who lets it all disappear.
You are listening to The Gold Standard with Ken Russo from Midas Gold Group, and today our topic is stock market warnings. Ken, you are a precious metal dealer, so people would expect you to encourage moving assets over into gold, but I know that you truly believe, based on your years of experience, that it is critical at this time for people to get some of their investments out of the market, at least for a while, to ride out the economic storm that appears to be on the horizon.
Yeah, eventually we will get a storm, Dave, whether if it's 6 months or 6 years. The financial system is very weak. And it would surprise me if we had a financial collapse sometime in the next 5 years.
Wow.
You can't fix a debt problem by issuing more debt. And as you know, we've gone up significantly in debt in the last 20, 30 years. And now it's going exponential. And it won't end well.
I just saw a news bulletin that the administration is going to be sending out another wave of relief checks. And that's on top of Congress passing the infrastructure bill and a lot of talk that Congress is going to pass the so-called Build America Back Better, Build Back Better spending plan, which is another almost $2 trillion added to the debt. That's a lot of money out there not backed by anything.
Yeah, and on top of what we've already had the last, 28 trillion. So let's just add on another 10, 20, or 30, or 40 trillion. And the debt ceiling they mentioned recently, they were going to raise that as well. So it's like an addict that keeps needing more and more and more and more. The only problem is it's taking tens of trillions of dollars now to get a little movement on the needle because we're so far into this process. So I think this is the last 3, 6, 12 months before we could see something fall apart. We have to make these moves now before that happens. And we're urging our clients and every listener out there, every American, to take a substantial part of their paper assets and move it into physical gold. And it'll be there when you need it.
Well, as I've said before, and I'll repeat it again, you are like a voice crying in the wilderness, and I hope people are paying attention to you. A reminder here that you are listening to The Gold Standard with Ken Russo from Midas Gold Group, and today our topic is stock market warnings. In a few moments, we're going to take a look at a specific gold product that you can add to your secure wealth. We'll be right back.
Sebastian Gorka here. The Biden-Harris administration is governing through an unprecedented number of executive orders. We have a good idea of what their agenda means for the country and for your finances. More debt, more regulations, slower growth, and higher taxes. There's even talk of a digital wallet currency and a so-called Great Reset. With massive new spending programs, the Fed is printing money even faster than before. This will likely cause the dollar to fall and gold prices to rise. That's why it's never been more important to own physical gold and silver, and the dealer I trust to do business with is veteran-owned Midas Gold Group. The experts at Midas Gold can even help you convert a portion of your IRA into physical gold and silver to stabilize your portfolio against the coming storm. Call Midas Gold Group for their guide to owning bullion and coins today. 855-322-GOLD. That's 855-322-4653 or MidasGoldGroup.com.
And we're back with more of The Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Deno, and our topic today is stock market warnings. By the way, if you live in the Los Angeles or Phoenix area, we encourage you to come on by and visit us at our local offices to meet with us in person. You can also see some of the metal, special precious metal, the gold that we're talking about. For the address and directions, just log on to our website, MidasGoldGroup.com, MIDAS, MidasGoldGroup.com. For those of you listening in other cities, call us directly at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. Now, let's treat ourselves by looking at a specific gold product. Ken, you're holding the gold product that we're talking about today. We're going to go back to Great Britain, and we're going to take a look at the Gold Britannia. I really like this one. Would you describe it for us?
That's a good point, Dave. You could actually hold it, much unlike stocks or annuities or bonds where it's at your broker, it's just digital assets, and you're not quite sure really where it is or what it is. And underneath the stock market, there's a lot of damage going on. But people are just still piling into Apple, Microsoft, and these stocks are holding the market up. It's making it look a little bit better than it really is. So people who are worried about that may put some of their paper assets in an asset like the Gold Britannia. Now, the Gold Britannia is the Great Britain main coin. It's minted in 24 karat gold. It's 9999 purity. And you usually can buy the Gold Britannia for a lot less than, say, the Gold Eagle or the Gold Buffalo. So it's a good value right now. Not as many people know about the Gold Britannia versus, say, the Eagle or the Buffalo.
Okay.
Now, this Britannia was first introduced by the Royal British Mint in 1987, and it was Europe's first gold bullion investment coin. Like I said, this is considered the flagship of British bullion coins issued by the Royal Mint. And the British Britannia, most common size, is 1 ounce of pure gold. It has a guaranteed face value of 100 British pounds. But you're buying the gold, you're investing in the price of gold, you're investing in a quality product, you're investing in something that will give you wealth preservation.
So it's worth a lot more than 100 British pounds.
Well, to buy this coin today is a little less than $2,000. And we'll see what happens with the price of gold over the next few months. But we think it's a realistic value, not much downside with a lot of upside. We think if the gold price, Dave, does good over the next 5 years and we see inflation take hold of the dollar and we print more money out of thin air, the gold price should double in the next 5 years.
Wow. It is a remarkable looking coin. Maybe you can describe it for us.
Well, it's a little shinier gold than, say, some of the duller finishes like the Eagle or the Buffalo. So the Britannia has that going for it. It's fairly large. It has good weight to it. When you hold it, it feels like it's worth a lot of money, which a lot of investors and a lot of clients say that's how they feel when they hold gold versus paper, which feels like nothing. Now, its appearance, head side, has Her Majesty Queen Elizabeth II. The reverse of the coin, or the tail side, has a stunning figure of Britannia, which is a mythological figure, so to speak, against a strong gale of wind, holding a sword and a shield. Looks like a Roman gladiator, so to speak. There's also a sunburst design behind Britannia that adds this anti-counterfeiting protection. It's a very high-quality coin, much similar to some of the other ones that we talk about every week.
Ken, I know that you are very high on gold being eligible for IRA accounts. What about the Gold Britannia? Is it?
Yeah, definitely eligible. This is definitely eligible for IRA transfers, old 401k rollovers. If you have some cash reserves and you want to move it into gold, you can take possession of the Gold Britannia yourself. All around, it's a great foundational gold product.
And you can guide me through the process of either buying this just as the coin and putting it into a metals IRA, a gold IRA?
Yeah, I mean, everybody has a different plan, Dave. Everybody has a different size treasure chest, so to speak. The Midas Gold Group is more than happy to advise prospective buyers on whether this coin is right for your collection or not. Any coin bought from Midas Gold Group comes in immaculate condition, comes straight from the mint itself.
Wow. Ken, thank you so much. My friends, you are listening to The Gold Standard with Ken Russo from Midas Gold Group. And today our topic is stock market warnings, and we're going to continue with that subject in just a moment.
I'm here with Midas Gold Group senior trader and Marine Corps veteran James Clark. James, why are people investing in gold and silver?
Well, Dr. Gorka, the Federal Reserve supplies money to pay for congressional spending. As Congress expands spending, the Fed has no choice but to keep printing money at an accelerated rate. This causes the dollar to fall and gold to increase.
So as the Fed and Congress devalue the dollar, what can people do?
As the nation's #1 veteran-owned precious metals dealer, we offer diversification strategies in the form of precious metals. As Congress looks to the Fed for more money, investors look to gold and silver to protect their nest egg.
And I recommend that you look to Midas Gold Group for all your precious metal needs. Call Midas Gold Group for their guide to owning bullion and coins today. 855-322-GOLD. That's 855-322-4653 or MidasGoldGroup.com.
We continue now with The Gold Standard, brought to you by Midas Gold Group with Ken Russo. I'm Dave Deno. Again, I want to remind you that if you live in the Los Angeles or Phoenix area, you are certainly welcome to come visit our local office to meet with us in person. For the address and directions, just log on to our website, MidasGoldGroup.com, M-I-D-A-S, MidasGoldGroup.com. For those of you listening in other cities, call us directly at 855-322-GOLD, 855-322-GOLD. By the numbers, that's 855-322-4653. We're talking with Ken Russo, Senior Vice President at Midas Gold Group, and today our topic is stock market warnings. So, Ken, we have commented on an article titled, "A Stock Market Indicator That Predicted the 1987 Crash is Flashing Red." Now, let's look at another article titled, "The NASDAQ and the Dow are now trading in a way that was evident just before the internet bubble burst." It states in part, the U.S. stock market is experiencing an unusual number of mixed trading sessions in which one major index closes higher and another finishes lower. This is not a sign of a healthy market. That's why the market's big drop on the Friday right after Thanksgiving was perhaps not as unexpected as it otherwise appeared. Comment?
There's a lot of volatility out there, Dave. The stock market is searching for answers. It's usually about 6 months looking forward. So, like I said, there's a lot of damage going on in the stock market that's kind of being masked by some of the biggest companies. So all is not well, but you have to be realistic. Over the last 12 years, stocks have done great. But when I start to hear about 10 and 15-year-olds about how good they are at trading their stock apps, I start to get a little concerned. It kind of reminds me of 1999 when I took a ride in New York in a cab, and the cab driver turned around to me and asked me if I owned any double-click shares. So when you start to see stuff like this, inevitably, we're close to a top.
Wow. This is an interesting trend that this article is talking about, where maybe the Dow closes down and NASDAQ closes up, or vice versa, with the Dow up and the NASDAQ down. And it's happening with more frequency. And before several other bursts on the market, it happened in increasing frequency as well. Ken, most people have the majority of their retirement investments in the market. So if the bubble bursts, what's going to happen to their wealth?
Well, the bubble will eventually burst. The question is how long is it going to go on before that happens? And the movement in the market, Dave, is kind of like a herd mentality. The money goes from one place and then it wants to leave and then go somewhere else. Well, the problem is, what happens when most of this money wants to get out at the same time? That's going to be a problem.
Yeah.
So you see huge volatility. It's all great when it's working, but what's going to happen when we have a financial crisis and the market doesn't allow every single investor to get out? So you have to try and make some of those decisions now. This is not a conversation to downplay stocks or downplay other opportunities. This is to advise and request people to think about protecting some of those gains and diversifying and getting out of some paper assets and getting something that is tangible that you could hold. It'll be there when you and your family needs it.
Ken, in addition to your advice to get a substantial portion of your wealth then into a safe harbor of gold, you actually like to recommend taking possession of the gold, or as you like to say, gold you hold is gold you own.
Yeah, if you don't hold it, you don't own it. And don't forget, speculation's great, but keeping all of your money in paper assets in the banking system could be extremely dangerous. Many people need to think about that. What if we can't access our money? Where's our wealth outside of the banking system? That's where gold comes in. So I would urge people to diversify paper assets. You don't have to speculate with 100% of your nest egg. And gold right now and silver is very undervalued. If you look at the price compared to all the money that's been printed the last 30 years and all the debt that we have.
And again, the amount of gold you recommend a person purchase to get started and to create a sizable hedge against inflation and to safeguard against economic collapse, the size of that, maybe a percentage?
Yeah, I think we're in very risky financial times, so maybe a little more gold than usual. I would not discourage people from taking 10 to 25% of their paper assets and moving it into gold. But everyone's different. Everyone has a different holding time frame. Everybody has a different size war chest. I would encourage a phone conversation, and I would encourage it today.
Ken, I got to tell you, you've given us an awful lot to think about and act upon today. Good reasons to call, I think, Midas Gold Group to explore moving a portion of a person's wealth as a means of preservation in the face of Wall Street's uncertainty and as a hedge against inflation. And I have to say again, I am thankful personally, I got to say this, for your advice and your help in putting a part of my family's wealth into gold. Thank you for that.
Well, you get a good situation and we get some business and together we have a nice relationship. So that's what it should be about.
And that's going to bring us to the end of our time together today here on The Gold Standard with Ken Russo, brought to you by Midas Gold Group. A reminder, opinions given here are not intended to be specific to your investment strategy, but rather general information to give you a better understanding of investing in precious metals. For answers to your questions, call Midas Gold Group at 855-322-GOLD, 855-322-GOLD. By the numbers 855-322-4653. And the website is MidasGoldGroup.com, M-I-D-A-S, MidasGoldGroup.com. The Midas Gold Group is proud to be America's #1 veteran-owned gold dealer, supporting veterans' causes with a portion of profits donated to the Wounded Warriors Project and the Semper Fi Fund. So your investment in your future is also an investment in the future of those who have bravely served the cause of freedom. Again, the number to call to speak directly with Midas Gold Group is 855-322-GOLD. Ken, thank you so much for your time again today.
It's been my pleasure, Dave. I enjoyed our conversation.
It's always good to be with you. I'm Dave Deno. Come and join us again next week at the same time for another edition of The Gold Standard.
The Gold Standard was brought to you by the Midas Gold Group.